NIO reported quarterly results that pleased investors, to be sure. It reported quarterly vehicle deliveries that increased by a whopping 144% from the same quarter the prior year. No wonder investors were impressed. The stock price was up nearly 10% following this earnings release. But looking further into the details, investors get more good news as the company's vehicle profit margins are expanding. The outlook for the next quarter is for continued robust sales, and the launch of the Envo brand is going as scheduled. So follow along and let's get a closer look at all the details on this September 5 investor update from NIO.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So NIO told investors that vehicle deliveries were 57,373 in the second quarter of 2024, and the mix was 32,000 premium smart electric SUVs and 24,800 electric sedans. That was an increase of 144% from the same quarter the prior year. And this is consistent with consumer demand, which favors SUVs over electric sedans. As you can see, the majority of its sales were for electric SUVs. Now, that wasn't the only good news for NIO stock investors. Despite increasing deliveries by 144%, or maybe because it increased deliveries by 144%, the company's vehicle margin expanded considerably. The company said 12.2% in the second quarter of 2024 for vehicle margin, and that was compared to 6.2% in the second quarter of 2023. So it nearly doubled its vehicle margin year over year. That's impressive, to be sure. And it increased from 9.2% from the previous quarter, a 300 basis point improvement quarter over quarter. That's really good news. Total revenues came in at $2.4 billion US dollars, and the gross margin for the company overall was 9.7%, compared to just 1% in the second quarter of the same year last year. I should say the same quarter last year. The loss from operations, the company is still losing money on the bottom line, $717 million US dollars lost on income from operations on revenue of $2.4 billion. Still, the company's balance sheet is in excellent shape. It has $5.7 billion as of US dollars as of June 30th, 2024. So the company does have the balance sheet to sustain. However, it needs to improve, and it is improving. The margins are improving drastically year over year, and with the launch of the Envo brand, which I'll talk a little bit more about a little later, that could fuel further increases in margins as the company increases scale. NIO also gave investors an update on how the third quarter is going so far. July and August are not included in the company's second quarter. They're included in the company's third quarter. And the company said that it delivered 20,500 vehicles in July and 20,176 vehicles in August. And so the company is on pace to deliver over 60,000 vehicles in the third quarter. And I'll talk more about the company's forecast for the third quarter a little bit later. Management commentary suggested the company has 40% of the market share in the battery electric vehicle segment, priced above RMB 300,000 in China. So in the slightly premium tier, NIO boasts significant market share. 40% is significant market share. NIO also unveiled some major technological breakthroughs, and they have now in-house developed intelligent driving chip, full domain vehicle operating system, and smart system and intelligent driving. Additionally, on September 1st, 105 Envo brand stores opened simultaneously. The brand's L60, the first model, will begin deliveries in September. So that's exciting news for NIO stock investors. This is the more affordable brand, the brand that will reach a mass market and have greater unit sales. And the hope is that with the greater unit sales, the company's margins and profits on the bottom line can improve because it can reach a broader audience, more than just 20,000 vehicles per month. This could perhaps multiply that by 2 or 3 or perhaps even more as the brand launches newer, lower priced models to reach an audience that can afford it, right? The lower price you have, the more people can afford your vehicle, and thus the more sales you can make. So one of the reasons why NIO is able to improve its gross profit margin was a decreased material cost per vehicle, which is one of the best reasons to have your gross profit margins improving, is lower costs per vehicle. And that will allow the company to also sell their vehicles at lower prices and still maintain a higher profit margin. That will make the vehicles accessible to more people while maintaining profit margins for NIO. So this is great that for the industry overall, material costs have been falling, and that's because EV sales outside of China have been stagnating. The Chinese market for EVs has been growing robustly, but outside of China, EV adoption has been slow, especially in 2024. Now that competitors can produce hybrids and internal combustion engine vehicles at full levels, and there are no more, I should say not no more, but very little supply chain constraints still lingering following the COVID pandemic. And so with the increased production of other models, EVs are declining in popularity in the US and Europe, everywhere outside of China. So looking at the third quarter outlook, the company says they're going to deliver between 61,000 and 63,000 units, which would represent an increase of 10 to 14% from the same quarter of 2023. Now, this isn't going to be the 144% growth the company reported in the second quarter, but that's okay. You shouldn't expect the company to deliver that kind of growth sustainably. They can have certain quarters that have that kind of jump in deliveries because of comparing against a lower unit sale quarter, or because they launch a new model that facilitates growth for a certain quarter. But longer term, if the company can grow vehicle deliveries at 10 to 14%, that would be a great growth rate for NIO stock investors. 62,000 units at the midpoint suggests that September is expected to be better than July and August, where they delivered roughly 20,000 vehicles. So it looks like they're expecting around 22,000 vehicles delivered for September, a little bit better than what they expected in July and August. All right, to wrap things up, NIO delivered an excellent quarter to investors. Phenomenal vehicle delivery growth at 144%, with improving margins almost doubling year over year, and the forecast for continued robust sales. Additionally, the launch of the Envo brand going as scheduled is going to add incremental growth to this very exciting growth company. Great news to be sure for NIO stock investors.
Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.